Tesla revving up today in the face of even more speed bumps for the company. Now, this follows a big upgrade by Canaccord Genuity. Phil LeBeau is out in Chicago with all the details on that market-moving note. Phil.
And Brian, we'll talk about that upgrade in just a little bit. Mixed signals for Tesla investors. Today you had T. Rowe Price, the largest institutional investor in Tesla. The report came out from the SEC that it has cut its stake in half. Meanwhile, you mentioned the Canaccord report. It's out today upgrading the stock and putting a price target of $450 on it, largely because of the belief by the analyst that the electric vehicle market is only poised to get much larger from here.
We think that we've gone from the altruistic, save the world type of paradigm, which caused a lot of the initial buyers for EVs and for hybrids, and we moved to the economics that really drive this forward.
Meanwhile, Morgan Stanley out with a note today looking at the growing competition when it comes to electric vehicles. Now, this was not a note about Tesla, but Tesla fans glommed onto it and said, wait a second, there's more competition coming. Newsflash, everybody knows that already. Adam Jonas basically saying, look at Rivian as a good example, an electric truck scheduled to come in 2020. Look, if they build it by 2020, it's going to be one of many new vehicles coming. In terms of the electric vehicle market in the United States, Tesla dominates it. In fact, if you look at sales last year, they're way ahead of everybody else. But keep in mind the Model 3 deliveries last year, and Model 3 was basically only delivered in the U.S. and Canada last year. That's why you had the big surge in sales relative to their competitors in the U.S. They're likely to keep that lead in 2019 and 20, but then we'll see what happens after that. And speaking of deliveries, there was a report a couple of days ago that got a fair amount of attention, a Reuters report essentially saying that there were major job cuts at a delivery center, basically a holding staging area outside of Las Vegas before Tesla vehicles are then sent to the respective locations around the country. Well, a lot of job cuts there. If you look at the reason why, Brian, keep in mind that they're not going to be delivering as many vehicles in the United States now that Model 3 production is ramping up and they're shipping those vehicles over to Europe and starting to ship them to China before the Shanghai plant comes on order. And that's why the stock really didn't move on that Reuters report about those job cuts.
Talk to us a little more, Phil, if you can, about Rivian. I know, listen, there's a lot of electric companies out there. I'm thinking Faraday Future sort of out there. I just wonder, how real is Rivian? I mean, how much long-term potential does this company really have?
It depends on how optimistic you want to get. Look, they have an impressive collection of executives there who have a nice mix in terms of newer development, in terms of technology and vehicles, as well as those who have an established background with other automakers who have been doing this for a number of years. So you got a nice mix of the two. And also keep in mind, Rivian will have a plant in central Illinois when production finally begins on its vehicles. That is the old Mitsubishi plant down in Normal, Illinois. But, guys, we're a ways from that happening. Again, the first vehicle is targeted for 2020. And, Brian, as you know, pickup buyers are the most loyal in the world. If there's an electric F-150, is somebody going to buy a Rivian or a Tesla pickup truck, or are they going to buy an electric F-150? We're not. Now, look, we don't even know if there will be an electric F-150 by 2020. But it's a tough market to crack.
Yeah, it is. They say 0 to 63 seconds can tow 11,000 pounds. Phil LeBeau, thank you very much.
That's a lot of pounds.
Yeah, listen, electric car. Guys, Tesla stock had a good day today. Guy Adami, it's down 6% this year. Audi e-tron, Jaguar I-Pace, a lot of competition.
Trading right in the middle of this range, this 275 to 350 range we've seemed to be stuck in for the last couple of years, number one. 39% of analysts buy rating. I think 33% or so sell. The rest of them are neutral. That tells you all you need to know, in my opinion. For every upgrade, say you have a JMP Securities, you have a Goldman Sachs after earnings that basically lowered their price target. I think you're smack in the middle. I happen to think you're flipping a coin. I'll say it again. I'd rather buy it if it gets closer down to 280 than buy it here and play stock market.
I tell you, I don't know where this number comes from this analyst. And especially, this is all coming after a call where we basically snuck in that the CFO had resigned. CapEx is down 60% year over year for a growth company, which meant better free cash flow, which means they're not really growing as fast. They annualized their production hard into the fourth quarter, and yet the growth they put out for 2019 is basically the same annualized rate as they were in the fourth quarter of 2018. This company, if anything, they have a solvency issue. They don't have a competition issue. I can't believe people are not even adding up the numbers in terms of their balance sheet and what's what.
Well, because we've seen companies that have had similar balance sheets prosper over the long term. I mean, if they're a game changer, I understand that. But look, more importantly, Pete, look at this chart.
Yeah.
Unless you're day trading this for 2 years, you've made no money.
Right. Yeah, it's interesting to look at that. As a matter of fact, I agree with Guy. I think on a pullback, the way you do it is, and we've talked about it many times, but you got to do it with options. because the stock is absolutely erratic. We know how difficult that is to trade. So I think with options, actually, on a pullback, you get towards 300, you probably can't wait to 280. You get towards 300, I think you put on an option spread there. I think that gives you an opportunity. Cash flows are pretty good. And I'll tell you what, with Larry Ellison joining the board, there's an independent factor there that I think puts something more secure to what we're looking at right now.
Also a guy with a couple billion.
And he's got a little bit of money.
Tim just mentioned that they
it.
don't have a competition problem. They have a potential solvency problem. Obviously, we know they're going to have to raise capital to do this sort of expansion.
Why
But
haven't they?
But last year, they shipped 245,000 cars. 145,000 of them are the new, supposedly mass market Model 3. You know what that car trades at? At about 50 grand. You know what the average car in America trades at? About 35 grand. So when you think about it, their promise of going mass market has not been realized, especially when subsidies are coming down right now. And if you're telling me they got to sell this car into China, build them here, ship them there right now, the Chinese stopped buying $1,000 iPhones last quarter.
Who's paying for China, by the way? Who's paying for China? Seriously, does anyone? The numbers don't add up. But
All right.
continue to do this.